morning, everybody. This is Dr. William Jones coming to you from the offices of the Future Millionaire Investor Alliance. Today, we're going to go over the trade that was taken on August 28th on the British pound. And as you can see, started as we always do, top down. And we see where on the highlighted bar, where the bar tried to go low and then pushed up higher and closed higher, gave me an indication that the buyers were taking control on the 240-minute chart. When that happened, I dialed down to my 30-minute chart. When I got down to my 30-minute chart, I was looking for a higher low. Same thing, different day. Came down, tried to test the bottom, and then when it went down trying to test the bottom here, I said, okay, let me just watch it here. And then I dialed down to my smallest time frame. And as you can see, I'll expand it out some here. As you can see, price closed above the bar that broke the high here. We ended up entering this trade about 23.4, 1.55234. Waited a long time. And then at about 10 o'clock at night, everybody see the move just take off to the upside here. End up making 20 pips on the trade. And that was a profitable trade for us. When you know where price is going because of where the money flow is, it's a lot easier to trade. Sometimes you have to be patient in trading larger time frame. The larger time frame, the longer you have to wait, but the bigger the profit potential as well. So that's the trade that we took on yesterday. Now, with that said, I sent out the topic that said Thirsty for Profits Thursday. Well, a lot of people ask, well, how much money can you make trading? And I always say it depends. Depends on your money management style, depends on how much money you're trying to make, depends on your risk tolerance. There's so many different variables. So what I wanted to do was give everyone an opportunity to see kind of the model that I use. And I'll pull this up here. Okay. And I'm going to give you an example. Okay. This is one of the spreadsheets I use to kind of determine how I'm trying to make money. And I want you to see this so that you understand where I'm coming from. We all know that it's $10 per pip on most currencies. I'm usually going for 20 points or 20 pips. Okay. And then the maximum I ever trade in lots is 20. There's no commission in the Forex market, which is one of the things I love. And typically I only trade twice a day. Okay. And my margin level on my account is about $500 or 300 to 1, something like that. And with that said, this is what I want to tell you. Being conservative, meaning you're only going for 20 pips a day. And you start out with one lot. Okay. And you don't take any of the profits. And you make $200 a day. All right. And then every time you get to $1,000, $1,500 somewhere in there, you increase the lot size. Okay. So we increase the lot size to 2. We start out with a $10,000 balance. Let me start over with this. We start out with a $10,000 balance. On day 1, we make $200. On day 2, we make $200. On day 3, we make $200. On day 4, we make $200. On day 5, we make $200. So I'm looking, okay, well, I might want to increase my lots. On day 6, we make $200. On day 7, we make $200. And on day 8, we increase the lot size to 2. All right, so now doing the exact same thing we did day 1, on day 8, we now make $400 because we're trading 2 lots versus 1 lot. Then the next day we trade 2 lots and we make $400. And then on day, I think this is day 1, 2, 3, 4, 5, 6, 7, 8, 9. And on day 10, we make $400 here. So we increase the lot size again to 3. Now we make $600 doing the exact same thing. Now we make another $600 doing the exact same thing. Then we increase it to 4 lots. So now we make $800 doing the exact same thing on day 15 or so that we did on day 1. And then we increase the lot size again because now we're up, making almost $1,000 per trade. And then when you get to 5 lots, you're making $1,000 on the exact same style. On day 6, or I'm sorry, on lot 6, you're making $1,200. When you go to 7 lots, you're making $1,400. And in a matter of a month trading, you make $23,600. Now let's do the math on that. $23,600 times 12. That's 264. I think I did that wrong. Hold on a second. 23,600 times 12. That's $283,200 in a year. Okay. Now, I say it's a $10,000 account to $100,000. This is extremely aggressive. This is assuming that's all you're doing is trading. This is assuming that you don't take any off days. This is assuming that you don't take any money out. This is assuming that this is what you do full time. This has a lot of, this $283,200 is very, very assumptive. More realistic, you could probably make $75,000 to $100,000. Maybe a little more, no less than 75, probably no more than 140. Doing this exact thing. But you have to have a method. The method that I've been using again for over 17, 18 years now is price flow analysis. It has given me a very free lifestyle. Money used to mean a lot to me. Now freedom means more to me than anything. My time. So my point in telling this is I'm trying to give you the possibilities of what you can do. Now that's pie in the sky if your trading method is shot or not very good, or if your mentality is you jump from one mythology to another mythology to this mythology. Well, most of the people in the room have been seeing me trading for at least a month. At least a month. However, most of the people in the room have also seen me lose on maybe 3 or 4 trades maximum in that amount of time, if I've lost on that many. And it's not that I'm a guru. It's not that I know something and nobody else is privy to or anything like that. I just know how to read the market. And once you learn how to read the market, these profits become very, very, very realistic for you. So before I get off of this page here, I'm going to open up for questions and just so we can have open dialogue and talk about it. And then we'll go scour the market for opportunities to trade. Are there any questions, please? Yes, sir. Absolutely. Give me 1 second here. All right. Wait a minute. Hold on. Right. Contracts and lots are the same thing. So when I say contracts, this here is a YM plan when I was trading the futures markets. But the futures markets and the Forex markets are different, but yet the same. The math is still the same. What you're trying to do, uh, 20 points in forex is the same as 20 points in the futures markets, depending on how much the contracts are. But if the contracts are $10, then the math is going to be the same. It's just a different vehicle. Right, in increments of point. Right, correct. Did I answer your question here? All right, cool. Are there any other questions? Yeah, I do that, but I do this as a whole with the entire with my entire company, right? My entire with the entire portfolio, correct? All right, guys, don't be shy. Ask me. Okay, here we go. We have a question from a. How many currency pairs would you recommend a newbie to trade? Maximum of two. Maximum two. I have six up to to view. That's only because I can I can go between the markets because I'm trading them, and as I'm trading them, I'm also looking longer term on some charts, shorter term on other charts, and things like that. But if you're new, the best thing to do is to look for the exact same thing on two different markets. That's it. Did I answer your question, Ms. Harris? All right. Please don't be shy. I'm here to answer any question that you may have. We're going to go scouring the market in about 5 minutes. Okay. How do I manage my losses? Well, the way I trade, I have a absolute stop. Okay. I have an absolute stop. So let's go ahead and go over to the charts so that we can take a look at that. See, this is my absolute stop right here. So let's say my absolute stop is 2680. I'm sorry. That's 28, 5428. So let's say my maximum stop is 26.8. Let's just use that as a stop. Well, I entered this trade, and I don't mind telling you, that's 12154. That's 154268. I entered this trade at 155234. So that, let's just say 100 pip stop. This is what I was telling the guys in the room yesterday. Because that stop was so large, I adjusted my contract size for my loss. So the maximum I want to lose on this trade is, let's say, $500. Or if the maximum I want to lose on this trade is $500 and I have a 100 pip stop, $10 a pip, the maximum I can trade is zero point 0.5 lots. Okay, so I adjust my stop on lot. I adjust my lot size a lot of times based on the stop. If I have a 20 to 30 pip stop, I'm using my regular money management plan. But anything above that, I'm I'm scaling in based on I'm scaling in based on my maximum stop. Like say for instance, if I love using this example. Let's say my maximum I'm going to make in a day for, let's say I'm on three contracts or three lots. The maximum I'm willing to risk is $600 because that's what I'm going to gain. So if my maximum gain is 600, I'm only willing to risk losing 600. So it becomes a zero-sum game if, in fact, I have a terrible day. Did I answer your question, Gordon? And if not, I'll clarify. All right. All right. Miguel, can you see the top of the spreadsheet? Absolutely. There you have it. All right. And what's your question, Miguel? Okay. All right, no problem. All right, if there are no more questions, I'm going to go ahead and end this session. And we're going to start scouring the market for trades. All right.